What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we had a very bullish rally. Will this rally continue to brand new all-time highs, or is this just a bounce before we continue to see more selling? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today on SPY we went up 1.43%, and we are starting to see an increasing volume on a buying day like today. Price action is back over our 20 simple moving average, but remember, just yesterday we did lose the bullish trend, and we still need to regain the bullish trend on the S&P 500. That should be very simple to do because we just need price action getting slightly higher, and we will regain that full bull trend. Remember, in all bull markets you're going to have two critical support levels, your 20 simple moving average and your 50 EMA. And just yesterday, we saw SPY retesting the 50 EMA. Last time we saw SPY retest the 50 EMA was on June 18th, and we had a monster rally off of that level going up 5.5% from the low. So right now, coming off of a critical support level like the 50 EMA and closing back above our critical resistance level, which would have been that 20 simple moving average, is definitely bullish price action. Remember, when you don't have a trend in either direction, you want to pay very close attention to the price action. And right now, the price action is screaming bullish. However, you always have to remember there is a chance that this is just a bounce, which would be considered a bull trap before we see more selling. How can you navigate the market knowing that we could see more downside? Is the same as I always tell you, is follow the price action and remain objective. Right now, if you're wondering if there's going to be more selling, you could either be fearful and not want to be in the stock market, or you can stay objective and follow the price action. So right now, above the 20 simple moving average, we want to continue to watch that critical support level at 430. If the price action stays above SPY 430, that is extremely bullish, and there's no reason to be bearish in a market that's bullish. So watch critical support, because on SPY it's very simple, and the critical support levels are just below at 430 and 428. Below 430 and 428, we'll definitely be seeing the price action breaking back down, and if we start taking out the low of the 50 EMA, that will tell us we're going to see more selling. So remember, in the stock market, you have to take on risk to get rewards, and coming off of a critical support level is the best time to take on risk. So right now, pay attention, because if we get back above about SPY 431 and continue to climb higher, we will regain the bullish trend and will very likely continue to see brand new all-time highs. We have upside resistance at 436, and our next price target would be all the way up there at 441, but I would like to see the bullish trend returning to SPY before we look at 441. So look at the next resistance level just above at 436 and watch those critical support levels. Remember to block out the noise and stay objective. It's constantly fear-mongering out there, and people are always saying be careful of the next stock market correction because it's going to trap you, and it's completely just fear-mongering noise. If you were wanting to get out of this market and you sold yesterday, or you flipped from bullish to bearish, you're absolutely getting whipsawed and you're going to lose a lot of money. I just said this last night, is don't get whipsawed, and the worst possible thing you could do is chase the market after the move had already occurred. So if you see the sell-off and you're currently in long positions, you don't want to sell for a huge loss and then go buy a bunch of put options. You're going to get whipsawed, and you're going to continue to lose a lot of money on a day like today where we see a huge bounce. If you held out on your long positions and you get out on a bounce, that is how you manage your risk. Never sell at support, always sell at resistance. The same thing applies if you're a bear. If you truly believe this market topped out, which I always tell you don't do because you never want to try to call the top in a bull market, you still want to be cautious, and you do want to be cautious at support levels. Bulls are going to buy the dip at support, and bears are going to try to short the market at resistance. So looking at this market, if you truly think the top is in, well, I guess time will only tell who's going to be correct, but these bull markets do not die easily. If I switch this over to a weekly chart, you can still see the S&P 500 is in a very strong bull trend, so trying to call a top is just trying to be a hero for no absolute reason. We're in a very, very strong bull market, and we have been for a very long time. You're going to see bulls buying the dip in a bull market, and you're going to see bears capitulating. So back to the daily chart, watch these resistance levels very closely, because we could be attempting to break out to brand new all-time highs if we continue to rally off of these levels. If we see more selling and we break below critical support, you'll know this was just a bounce before we're going to see more downside, and then we possibly could see a stock market correction. Jumping over to the Nasdaq100 triple Qs, you can see that we never actually lost the bullish trend. The 5 EMA never crossed below the 13 EMA, and all of these moving averages are still stacked to the bull side, And even though the price action did close below our critical support level at the 20 simple moving average, we can see just today we've already regained the bullish price action and we're back over all the moving averages in just a matter of one day. So this could still be a bounce, but if you're looking at the price action and the trend, they're all still full bull. When you have fully bullish price action and a fully bullish trend and you're trying to call a top in a bull market, you're playing with fire and you're only going to add fuel to the bull market. Remember that skepticism fuels bull runs, and if you're in a bullish trend with bullish price action and you're trying to call a top, you're simply just guessing and you're trying to be a hero for no reason. So while the triple Qs did break our trend line, it's still just possible this is a pullback before we go for another leg higher. So watch our critical resistance above right around 359, 363, and then our next price target will still be up here at 367. Our critical downside support is 356.5, 352.8, and then we do have our breakdown level. If we do start closing below about 352, we will know we're going down for another leg lower, which is very likely meaning we're going to retest the 50 EMA of support at 347. So right now, as long as the triple Qs are above about 356, we're still in a full bull trend, and there's no reason to believe that we're not still climbing to brand new all-time highs. Remember, we're staying objective and we're letting the price action do all the talking, and we're not one of those people just guessing, hoping to get lucky. On the Dow Jones, we were up 1.53% today, and we did see the Dow Jones bouncing in a very serious way. We still lost the bullish trend as of yesterday, and we have yet to regain it back, and the price action is still below our 20 simple moving average at 345. So right now, the Dow Jones still just looks like a bounce because we don't have the bullish price action or the bullish trend. Remember yesterday we closed below the 50 EMA, but then again today we're right back over it. So if we see the Dow Jones fully closing this gap above at 346 and getting the price action back over all the moving averages, we can get bullish on the Dow Jones once again. Remember, the last thing we saw the Dow Jones do was form a higher high, and potentially we're now forming a higher low, and that's exactly what you see in bull markets. So follow the price action. Even though we don't have a bullish trend, we still have bullish price action bouncing off very critical support. So the Dow Jones critical support levels are 343, 341.7, and down here right around 337. Upside resistance is 345, the gap close at 346 and 348, and above that we're retesting all-time highs at 351. On the Russell 2000, we also saw a very strong bounce today, going up over 3% and getting back above the 5 EMA. The Russell 2000 was down here at very critical support yesterday, just above 209, and we're back above that resistance level at 215. We're still finding resistance at 219, and we still have plenty of resistance above at 222 and 224. Remember, the Russell 2000 is very close to going into a bear market because we do have bearish trending and bearish price action. The price action is below all the moving averages, except for today we're back over that 5 EMA, and we're very close to seeing our 20 simple moving average crossing below the 50 EMA. So in a full bear market with a full bear trend, you will see short sellers trying to short at resistance. And right now we see the Russell 2000 right at resistance at 219. So look for a potential pullback off of this level and look for support down here at 215. We need to get back above 224 to start regaining some bullish momentum for the Russell 2000. On the Arkk ETF, we continue to see a bullish trend developing because we see Arkk green now for 3 days in a row. Remember, Arkk represents the growth sector, and it was green on Monday and Friday when the rest of the stock market was actually in the red. We see the Arkk ETF going up 2.97% today and blasting above that $120 resistance level. Price action is back over the 50 EMA, and our 20 simple moving average is sitting up here at 124, so that will be our next critical resistance level. Look for Arkk to have resistance at 124 and then just below 128, with downside support at 120 and right around 116. Remember, the Arkk ETF represents growth sector, which will do great in a low rate environment, and that's exactly what we're currently seeing in the stock market. So look for Arkk to potentially push to another leg higher, and as you can tell, we still do have higher highs and potentially just put in a higher low. On the VIX, which is our fear indicator, we see the VIX getting crushed today, going down over 12%, and it's back below 20. Remember, I said just yesterday that the VIX is forming lower highs, so these volatility spikes are completely normal during stock market pullbacks. A pullback is not a correction because a pullback is anywhere between 1.5% to 4.5%, and that's exactly what we had a pullback in the range of for the S&P 500 and the Nasdaq100. If we see the VIX getting back over 20 and breaking out above 25, that will tell us this was just a bounce and we are due for another leg lower to finish out a stock market correction. But right now, looking at the VIX, you have to understand as long as it's below 20, the pullback is likely over and we will see the VIX continue to get crushed and we will go to brand new all-time highs. We have a gap to fill on the VIX right around 18.7 and we're very likely going to see the VIX continue to get crushed if we are going back into a bull market and continuing to climb higher. So watch the VIX because it will tell you pretty much everything you need to know if we're going into a correction or not. On TNX, we were up 2.54% today, and we see the TNX closing that other gap below at 1.16. And this chart is definitely showing very low rates, which should be bullish for the stock market. Remember, low rates are bullish for the stock market, and that's exactly what we're seeing. So it is possible we continue to see the tech sector and the growth sector continue to outperform. So watch TNX because right now it's continuing to show signs of weakness, which does mean we could continue to see strength in the stock market. On TLT, watching our bond market here, we see that parabolic move starting to give back a lot of those gains. I said this just last night, these parabolic moves are not sustainable and we do have a gap to fill right around 148. So look for TLT to possibly come back down to fill this gap. Even though TLT is in a bullish trend, these parabolic rallies are not sustainable, so look for it to potentially give back all of these recent gains before finding support and potentially going back higher. There's a lot of talk going around that the stock market is about to crash because the bond market is getting a lot of the money. Remember, if everybody is saying the same exact story and all the retail investors believe it, it's more than likely not true and it's not going to be the case. So be careful about all of the noise going around with all of these different theories on why the stock market is going to crash. Block out the noise and stay objective and you'll always be on the right side of the trade and you'll always know how to react to the price action moves. Guessing is not a strategy, and if you're making money off guessing, you're just getting lucky and it's not a sustainable strategy. On the dollar, we continue to see the bull market roaring on with price action still over a positive sloping 5 EMA and we still have the bullish trend. This will continue to put pressure on gold and silver, so you need to watch the dollar closely. On gold, we see the third day in a row closing below the 50 EMA after we got rejected at our resistance level at 1829. Look for downside support at 1795 and 1776 with our upside resistance at the 50 EMA at 1813 and 1829. If we could break above 1829, we could start to run to 1876. On silver, we see that support level barely surviving at 25.1 as we're seeing silver bouncing off of that level. Below this, silver could become a falling knife and we could go down for another leg lower, so watch that support level closely. We still have resistance at 25.8 and our 20 simple moving average right around 26. On Bitcoin, we're currently down over 3.6% and we are trading below that critical support at $30,000. So this is definitely a price action breakdown that is not a bullish indication, and we have had the bearish trend for quite a while now. So remember, when you have a bear trend and you're trading in a critical price action support level and that level breaks down, it does increase the probability you're going down for another leg lower. So the next leg lower on Bitcoin is $27,000. Now you don't want to just assume we're going there because there's always the possibility you get a false breakdown. You've seen it before back here on June 22nd where we wicked down below support and we did close above that support level. So we still do need to see where this daily candle is going to close. But if it does close below critical support at 30,000, we could be coming back to $27,000 support. Below that, we could be going to 23,000, and below that, we could be going to 20,000. And remember, as long as we have the bear trend, it will favor lower and lower price action. So watch these critical support levels and see where this candle closes, because these could be great buying opportunities if you are going long term on Bitcoin. But you have to be willing to hold through the volatility. The critical resistance levels continues to fall with the 50 EMA and it's now right around 35,000. So you need to see Bitcoin holding above 30,000 and breaking back above 35,000, or it will break down and come back down towards 27. And remember, if you're buying Bitcoin at these levels, it's an accumulation for the long term because there's nothing bullish about the Bitcoin chart. So understand that going into it and follow the price action closely. On Amazon stock, we were up 0.66% today and we did close back over our 20 simple moving average and we're barely holding on to the bullish trend. We see the price action getting rejected at resistance at the 5 EMA, which could be a bad sign if we continue to head lower from here. But if we can get back over about 3,600, we could hold on to that bullish trend and we are above our critical support right around 3568. So I still think Amazon is going to get to 3,800, so look for upside resistance at 3655, 3760, and 3,800 with our downside support at 3568, 3552, and 3500. And below that, we could be coming back down to our 50 EMA at 3452. On Tesla stock, we had a bullish day today, going up 2.21%, and we're back over that critical resistance and now support level at 648. Remember that Tesla above 648 increases the probability we're going back into a bull market, and we're very close to regaining the full bull trend. We need to see Tesla getting back above our 20 simple moving average and breaking out of our resistance level at 692, and we will see Tesla in a bull market yet again. We do have earnings coming up right around the corner, so do pay attention to that, because there's always the possibility we see huge volatility before and after earnings. So your critical resistance level is 692, and above that we could start running to 765, and your critical support is 648, and below that we could be coming back down to 626 or 594. On Apple stock, we closed the gap today, going up 2.6%, and we see Apple stock back over the 5 EMA and still holding on to the bull trend. We still have resistance at 148 and our previous all-time high around 150, but our next price target above 148 will be 156. Our critical support right around 143 did hold up, and we are bouncing off of that level, and we still do see a very strong bull trend, so I don't see any technical breakdowns in Apple stock at this time. So it's possible this was the pullback before the next leg higher to 156, or again, this could still just be a bounce before we see more selling. So your critical support levels are 145 and 143, and that 20 simple moving average at 140. Below 140, we're very likely closing this gap at 137, so pay attention to that level if we do get below 140. On the financial sector, we were up 2.48%, but we still see the financial sector in a bearish trend with the price action below all the moving averages. So this still does look like a dead cat bounce until we see price action getting back above the 50 EMA. On the industrial sector, we were up 2.8%, and we had a very monster bull rally today, going back above all the moving averages with the price action. We don't have a bullish trend or a bearish trend, but we do have a very bullish looking candle today. On the healthcare sector, we were up 1.22% today, and the price action is back above all the moving averages, and we're still holding on to the bullish trend. The energy sector was up 1.34% today, and we still have a gap to fill just above. The energy sector is very close to going into a bear market because we are about to have the full bear trend, so pay attention to the energy sector at critical resistance levels because it could be going into a bear market. So jumping back over to the S&P 500, we can definitely see a bullish rally across the board today, but we're not out of the woods just yet in all of the sectors. In the indices, we still see bull trends in the Nasdaq100, and we do see the S&P 500 very close to regaining the full bull trend. So at these levels, it's very possible we're on our way to brand new all-time highs, but you need to be cautious that we don't start breaking down through critical support, because if we do, this was just a bounce before another leg lower. So be on the lookout for those support levels, and if they start breaking down, you will know to look for the next leg lower for the selling to find the next possible support level. So pay attention to the price action and do understand that we are still in a very strong bull market, and these bull markets do not die easily. There's a ton of you trying to call a top, and you're just trying to be a hero for no absolute reason, and while eventually you will be correct, hopefully you still have money left, because in a bull market you don't want to be trying to call a top and shorting. If you're shorting these tops and you're covering on these dips, you're gonna make it out just fine. But if you're accumulating short positions and you're holding on to them because you think we topped out, you will lose a massive amount of money if we continue to rally higher and higher. So be on the lookout. There's a big difference between trading a short position and being a short accumulator who's trying to call a top and thinks we're going much lower. Also remember, I have my trade alert service called Bank Trade Alerts that only trades TQQQs, and it's very simple to follow. All you need to do is execute the trades yourself, and all of the buy and sell alerts come directly via email and text message. I'm running a 50% off promo code for your first month, so now is the best time to try out Bank Trade Alerts. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market. You can find out how to join the Stocks Channel Discord trading community by clicking on the links below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.